Hello, my name is Larry Hall, and I'm speaking on behalf of my Burkenroad research analyst team of Ishida, Pierre, Shingbo, and Prashant. Today I will discuss our analysis of Marine Products Corporation, which is listed on the New York Stock Exchange under the ticker MPX. Based on our research, valuations, and financial projections, we gave Marine Products a market perform rating at a 12-month target price of $6.60. Marine Products is a designer, manufacturer, and wholesaler of recreational boats, headquartered in Atlanta, Georgia. The company's products include sport boats, deck boats, cruiser boats, sports yachts, and sport fishing boats. Marine Products distributes to a group of 137 domestic and 55 international dealers under the Chaparral and Robalo brand names. Chaparral was founded in 1967 in Florida by William Pegg, who remains with the company today. In 1976, it purchased a production plant and moved to Nashville, Georgia. Chaparral was acquired by RPC in 1986, an oil and gas services company in Atlanta, Georgia, and part of the Rollins Family Corporation. Marine Products was spun off as a separate company in a stock offering in 2001, although the Rollins family maintained a controlling share. In the same year, the company acquired the Robalo brand in order to expand into the fishing boat market. Marine Products provides a full spectrum of boating options, from entry-level to high-performance professional cruisers. It provides outboard, inboard, and stern-drive boats. H2O is the entry-level boat introduced in 2011 with a retail range of $22,000 to $37,000, and it targets the family group. Signature cruiser and premier sport yachts are available between the price range of $95,000 to $896,000 and appeal to experienced boat owners. Robalo has 12 models under the sport fishing boat category. The price range is between $26,000 and $277,000. The drive type is outboard and they appeal to experienced fishermen. Marine Products is a part of the recreational boating industry, which is a part of the larger recreational activities industry. The recreational boating industry generates about $31 billion in annual revenues and is highly competitive. With about 130 stern drive and 300 outboard boat manufacturers, we expect consolidation within the industry over the next few years. The top 5 stern drive manufacturers have a market share of 52% of the market, yet the industry is highly fragmented with numerous small players. Since sales in the recreational boating industry are dependent on people's inclination to partake in leisure activities, revenues are driven by broader macroeconomic factors. The revenue streams are generally cyclical as the boating season starts in April and lasts through the summer. The competitive industry requires that companies come up with constant innovations to attract customers who have a wide variety to choose from. High-end customers demand quality products and newer technologies and are far less sensitive to price, whereas customers in the low end of the spectrum are highly price sensitive. Given that the leisure time of people has reduced over the years, and the fact that this smaller pie of leisure time is shared by other outdoor and indoor recreational activities, we expect the boating industry to shrink in the long run. Marine Products stock is traded in the New York Stock Exchange under the ticker MPX. As of the report date, April 5, 2012, Marine Products has a market cap of $219.62 million. Marine Products has 37.8 million outstanding shares, but around 73% are held by insiders. Marine Products has an enterprise value of $164.56 million. In 2011, the PE ratio was 32.3 times for Marine Products. Our Burkenroad analysis report arrives at the 12-month target price for Marine Products of $6.60, and we give Marine Products a market perform rating. The valuation methods we use to derive the 12-month target price include discounted cash flow, historical multiple method, and relative multiple method. The discounted cash flow method uses a model to predict future cash flows for a company and discounts them to their present value. Discounted cash flow is very relevant for marine products because the company is stable with a predictable cash flow stream and no debt. The historical multiple method uses the company's historic multiples, such as price to earnings, price to book value, and price to cash flow per share. Since Marine Products is a stable company, the historical data is a reliable basis for forecasting the future, and the use of three widely used multiples eliminates potential abnormality. The multiples were taken over a period of 7 years, and different weights were assigned to each multiple. The relative multiple method is used to compare a firm's value to that of its peers or competitors to determine the firm's financial worth. The peer group consists of Brunswick Corporation, Polaris Industries, and Arctic Cat. The peer group of marine products is small, and there exists a lot of variance for each of the four multiples. From this graph, we can see the past 52-week range for marine product stock is a low of $3.12 and a high of $7.77. The investment thesis is the summary of our analysis of marine products. We have identified 6 main factors that contribute to our rating of market performance. The first, marine products has remained committed to developing new designs throughout the recession, and this development is allowing the company to enter new markets. Marine products developed 2 new models during the recession, including the award-winning Chaparral 327 SXX and the Chaparral H2O. The H2O is designed as an entry-level boat. This lower-cost product is popular during the weakened economy, and initial sales have been strong. Number 2. Because macroeconomic factors drive the recreational boating industry, the players in the industry can expect to benefit from the improved economic environment through increased sales. The participation of baby boomers nearing retirement can lead to a moderate surge in the number of new buyers, thus translating into higher returns in the short term for the recreational boating industry as a whole. Number 3. Based on a general consensus from analysts and marine products management, we believe the demand in the recreational industry is set to shrink in size in the long term, and the industry may consolidate. Although our long-term performance expectation on the industry is fairly conservative, we believe that marine products can capture significant market share in the consolidation or grow through acquisition. Number 4. Marine Products has a debt-free capital structure. This structure is somewhat conservative in today's marketplace, when typically many companies look to take advantage of leverage to increase returns. This debt-free structure helped Marine Products weather the recent economic downturn. Because the company had no debt as well as excess cash, management was able to undertake capital investments to better position Marine Products in the current economic state. Also, while Marine Products peers have diversified into other product offerings, Marine Products management, which has years of experience in the industry, has decided that the company will focus on its core offering of recreational boats. Number 5. The lack of diversification exposes marine products to cyclical downturns faced by the industry as a whole. According to the National Marine Manufacturers Association, boating is less popular for younger generations than it was 15 years ago. This aging of demographics, we believe, may portend stagnant long-term future sales for the boating industry. Also, external factors such as low consumer confidence and economic slowdown could negatively impact the company's sales. We also observe that marine product sales are highly seasonal, reaching a peak in the second quarter. A well-diversified firm can better withstand the external factors and seasonality than a non-diversified firm can. Number 6. According to the company's latest annual report, insiders control approximately 73% of the outstanding shares of marine products. This concentrated ownership makes hostile takeovers impossible, even with the high amounts of cash on Marine Products' balance sheet. This insider ownership ensures that the management is motivated and focused on the long-term health of the company. However, minority stockholders do not have a voice, and the amount of stock available on the open market is limited. Thank you very much for your attention. We hope you have found our report on Marine Products Corporation to be informative. The Burkenroad reports are produced solely as a part of an educational program of Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.